Bismillahirrahmanirrahim. Dear students, we start CAF 1 Introduction to Accounting Spring 2020 question number 3. Question number 3, which belongs to accounting equation. Following information pertains to Palestine brothers for the month of January 2020. Business travel expenses amounting to $85,000 were paid by owner from his personal bank account. Payment of $45,000 was made for repair of owner's personal vehicle. A laptop costing $50,000 and having book value of $60,000 was sold for $100,000 on cash. The scheme of creditor having a balance of $1.5 million has been admitted to the partnership. The balance payable is to be treated as his capital. Goods costing ₹180 were sold to the owner of the business building against office rent of $2,000 for the month of January 2020. A debtor who was declared bankrupt has paid to $400,000. 50% of the balance due is full and final settlement. A specific provision at 60% of the balance due had already been made. Show the facts, if any, of each of the above information in the form of accounting equation. Let's start. Dear students, I used to teach students accounting equation in the professional examination. Such as CA, ACCA or ICAEW through the journal entry. The first adjustment was business travel expenses amounting to $85,000 were paid by the owner from his personal bank account. This means that expenses should be debited and capital should be credited. First of all, let me tell you that how I have solved this accounting equation. Accounting equation is assets is equal to liability plus equity. Assets minus liability is equal to equity. Another way out to write. If we transfer this equity to the left side of the equation, this equation becomes assets minus liabilities minus equity is equal to 0. Now, if I write debit as positive and credit as negative, or in the brackets, this becomes the journal entry. Assets has debit, liability credit, it means that has to be less. Equity credit, this has to be less. Debit minus credit is equal to 0. So, first adjustment, expense debit and capital credit. Expense debit, capital credit. And you know that all the expenses ultimately transfers to the equity in the capital. We used to write like this: capital add profit less drawings in statement of comprehensive income. So expense debit, capital credit. A payment of $45,000 was made for repair of owner's personal vehicle. Adjustment number 2. Repair of owner personal vehicle, it means it's a drawings. Payment made, drawings debit, cash credit. And if we see this whole line, it ultimately is 45,000 minus 45,000. 45,000 minus 45,000 is equal to 0. Adjustment number 3. A laptop costing 250,000 and having a book value of 60,000. The book value is 60,000 was sold for 100,000 on cash. An asset, a laptop having a book value of 60,000 is disposed of, sold for 100,000. Cash debit 100,000. Asset, fixed asset credit 60,000, and which results the gain credit gain transfers to the equity, the capital, so 40,000 credit. 100,000 minus 60,000 minus 40,000 is equal to 0. Adjustment number 4. The scheme, a creditor having balance of 1.5 million has been admitted to partnership. The balance payable is to be treated as his capital. This adjustment has creditor debit and capital credit. Creditor debit, all debits are in positive and all credits are in brackets negative. 1.5 million debit, 1.5 million credit. Goods costing 180,000 was sold to the owner of the office building against office rent of 210,000 for the month of January 2020. This has two journal entries. Number 1. Rent expense debit and sales credit with 210. Rent expense debit, sales credit 210. And another entry, cost of sales debit, inventory credit. You see, 180,000 minus 180,000 is equal to 0. 210 minus 210 is equal to 0. Adjustment number 6. A debtor who was declared bankrupt has paid 400,000. 50% of the balance due in full and final settlement. Full and final settlement means out of 800,000, 400,000 received. 400,000 cash debit. Debtor should be full and finally settled. 800,000 credit, and the balance is the bad debt, or you can say doubtful or bad debt. Debit, expense debit, bad debt debit, expense debit, cash debit, and debtor credit. This is the adjustment journal entry. A specific provision at 60% of the balance due had already been made. 60% provision amount was 800,000 into 60%, 480,000. Provision debit 480,000, provision debit, and already expenses already made, so expenses should be reversed. Expenses credit, all sales done, purchase done, expenses and other incomes etc. came into the equity ultimately. So all related expenses, sales will come in the equity column of the accounting equations. Since I'm teaching CS students here in Pakistan, I used to teach accounting equations using journal entry as we did. It helps to save time and you do not have to think where to add, where to subtract, or once again add. So this way, if you make any mistake, the journal entry will let you know that there is any mistake in the solution. How? When you see that every line has zero balance, there would be no mistake, inshallah. Okay, this solution can only be used by the professional examinations such as CA, CCA, ICAEW, CMA in the whole world through the journal entry. No problem at all. All professional knows only what you have to do. You have to make a note. If you write this note, then there is no problem for the professional to check these journal entries and this accounting equation. Now the question is how a person who is in class 11 BCom, MCom or other, how he will solve. So what he will do, CA students can also do like this. Lots of teachers teach like this also. However, this wayout has not been discussed. This wayout has not been discussed anywhere in the books, but it is applicable and suggested for the students who are doing CA, ACCA, ICAEW in the whole world. Let's move on. What is the alternative solution? This is alternative solution. So this can be used by BCom, MCom, MBA, grade 11, O levels, A levels, everyone. So first adjustments, expenses paid by the owner. Expenses paid by the owner. Expenses increased. When expenses increase, equity decreased. Paid by the owner means capital. Capital increases means equity increased. On the other hand, drawings, second adjustment, payment of 45,000 made for repair of owner's personal vehicle. This is what I was telling. When drawings came, drawings reduced equity. This is drawing reduced equity. Cash also decreased. So here you will not be able to check whether you are doing correct entry or wrong entry. Both are going reduced. Even a professional may sometimes held whether both should be less, both should be added, what to do. So best solution is the journal entry solution. Adjustment number 3. A laptop costing 250,000 having book value of 60,000, fixed asset reduced with 60,000, cash increased with 100,000, and gain increased the equity. So here also positive written as. So in this way you will not be able to check whether you are going right or wrong. Next adjustments. Creditor having balance of 1.5 million has been admitted to partnership. Creditor reduced and capital increased. Creditor reduced, capital increased. Goods costing 180,000 was sold to the owner of the office building against rent to 1,000 for month of January. Expenses increase which reduce the equity. Sale increase which increase the equity. On the other hand, cost of sales increases, so equity decreased and inventory also decreased. In this way you once again will not be able to check whether you are right or wrong. Last adjustments. A debtor who was declared bankrupt has paid 400,000, 50% of the balance due in full and final settlement. Bad debt. Cash came with 40,000, cash increases, debtor decreases. Over here, due to bad debt increase, equity decreased. Once again you are not been able to check whether your answer is right or wrong. Provision reversal. Expenses decreased, so equity increased and provision decreased. Thank you very much. I hope you enjoyed this video, and definitely your knowledge will increase, as this way out has never ever been seen anywhere on YouTube. Stay tuned. I hope you will subscribe my channel for more knowledge. Thank you very much. Best of luck.